In this video, you'll learn how to use two effective trading indicators, VWAP and anchored VWAP, to potentially achieve maximum trading gains. Brian Shannon, veteran trader and trading author and longtime friend of ours, is our special guest presenter for this video. And if I could just take an aside here, Brian is a real thought leader in the trading space. And look, we're all trying to make a contribution to the trading community here, and Brian has made as much of a contribution as anyone to the trading community with his ideas. He's just released his second book for the trading community, Maximum Trading Gains with Anchored VWAP. During his talk, he shared some of the key concepts with our desk from the book, and now you get a chance to listen in on that. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City, and proud to have developed numerous 7 and even 8-figure per year traders. We hope you agree. This is the top YouTube channel to help you grow your trading account.
Yeah, I've been coming to SMB at different locations, I think since '06 was, I saw somebody posted a video recently of me looking all weird and young. Anyways, so when I'm in town, I like to come hang out with you guys and talk about what's going on, what I see and what I'm doing. And I've just written a book about the anchored VWAP, which I hope you've heard of and seen and purchased. But today I wanted to, give you a couple of the, basically the chapters in that book and go over it a little bit. So, we don't need long introductions, just get into it. Part 1 is just VWAP versus anchored VWAP. And what is it? I'm sure you guys all know. VWAP is just the daily, and then anchor, you can use intraday on a 1-minute chart from the 10:30 a.m. low if you want, to 2:46 p.m. high or whatever. I had a couple trades actually in Mobileye today, using different anchors on a 1-minute chart. And I always do this in my presentations. I get distracted and I move over to the charts because this is where it really makes more sense to me to talk about stuff. But this is Mobileye today. But that's what I was drawing when I was doing it intraday. First I have, I've always got the prior day's VWAP, the 2-day VWAP, basically. It's not really 2 days until the end of the day, of course. But, Friday, it gapped down, ran up, and then got, held that 2-day the daily VWAP on Friday. And then this morning we pulled back right down almost perfectly to it. I mean, there was clearly a program there buying this stock. Anyone who thinks this stuff is a coincidence, can just leave the room right now. But, in writing this book, I wrote to a lot of, I spoke to a lot of, fund managers who run billions of dollars, and they confirmed, Brian, after a Federal Reserve meeting, I would have this guy would have his traders buy, 500,000 SPY in the next hour, give me the anchored VWAP from the 2:15 announcements. Don't, don't beat it by, don't do worse than the anchored VWAP from that first hour. So, these orders exist out there. So what I was looking at this morning, it pulled back, it held right on that 2-day VWAP. I bought it on this little surge right here. So part of what I'll talk about is, there's a preference. Do you want to buy the touch of the VWAP? So sometimes you look at it and you're like, wow, man, it's magic, right? It bounces precisely from there. You might have purchased right here. Again, this is a 2-minute chart. You might have purchased right here and thought you had the right buy, but then it came back down. You might have looked and said, well, I'm not sure yet. So if you give it a little bit of time over to settle, I bought it right here. My stop was underneath this level. So I'm risking, I think it was, 18 cents or something ridiculous. So and right from there, you can see that that's where that new move began. So I set an anchor. I set the anchor after this bar right here. I knew that was an important level. And then you see how it became support again, right over here. It's just amazing. So I traded some of this. I had to go do something. And then later in the afternoon, I put one off of this peak right here and off of this low. I got involved in it right here at this point. My stop was under there. And then I turned my computer off at this time, and walked over here from my hotel. So the point is, there's a couple of things I'm pointing out here. I'm kind of doing it backwards because I think you guys are, using this stuff every day, and I hate to just, bore you with a PowerPoint of slides of things that have happened in the past. This is the good stuff, right? This is what's happening real, live, and now. So this is how I look at it. And the most important thing is, one, always, you're going to have a daily VWAP on there. Second, I always have at least the prior day's VWAP on there, because so many times, especially in a strong stock,
it's a great second day play where tomorrow this will become, let's just color this black, this will become the daily volume, the 2-day VWAP tomorrow. Okay, so tomorrow morning I would be looking for this stock ideally to come down in here, touch on this 2-day VWAP, and then as it gets back above tomorrow's volume weighted average price, so tomorrow's VWAP would look something like this. So it would come down, and I would want to be a buyer right here as it gets above the daily VWAP with a stop under the the second day VWAP. And I back that up, of course, not just looking at the 1 minute chart. You've got to be aware of what's the bigger picture, and the bigger picture is pretty bullish looking. It just broke this key level of resistance right here and looks like it's going to make a run for that high probably this week, I would think. So, it's about putting all the time frames together and knowing where to anchor from. So again, why did I anchor right here? Well, because it had sold off, it held that level, and once it started to move, I knew that was a level, and I will often put an anchor from, the high of the day as it comes back down later. It's not always going to give you incredible insight. Nothing will. But we know for a fact from this point the buyers maintained control throughout the afternoon because it never clicked below this. We'll just color that red. That's why I always color them different, so you can differentiate the different VWAPs. But what we covered is basically, always have your daily VWAP, the prior day at a minimum. I like to use week to date, month to date, year to date. There's a lot of moves right now. A lot of stocks are failing around the year to date. A lot of the stocks that kind of have bounced recently, the Cathie Wood stocks basically. And you can see it in ARK because ARK is doing the same exact thing. And ARK looks like it's, going to have some problems here. Where is not, there's the year-to-date anchor. So if I don't know why that didn't stay on there. I'm completely ignoring my PowerPoint so far. Because I'm a trader, and this is what I like more. So Coinbase, it's failing at the year-to-date VWAP. So again, the points, a couple of points. Always have, your daily anchor. Depending on how aggressive you want to get intraday, market from, again, that 1038 low, or where it just started to see that renewed momentum campaign in the morning in Mobileye, sorry. So, where it begins that new momentum campaign. And what it tells us is that from that point, the buyers have maintained that control. It's 100% objective. The average person from this anchor who is long is in the money. The average short is losing money. So as it pulls back to that, maybe they're going to say, hey, I'm going to get out of this thing and provide a bid. Maybe a buy program hit there and it said, we're going to buy this based on, through the end of the day, through the close, and we're going to buy as it pulls back to that level and defend it. So what we want to do is say, what's your personal preference? Is it your personal preference to buy as it touches that VWAP? Or is it your preference, it's my preference, to buy as it moves away from there and then set the stop underneath that low? Because how many times do we see that, it looks like it bounced, it does this, and then just completely continues to go lower. So we want to buy with momentum is my argument. What you guys do is what works for you, and I'm not here to convince anyone, what I think you should do. I think you should do whatever you feel works best for you. So let's go back and click through some of these slides. We know it's price, volume, and time. You can slow me down if this is, too slow or too fast. I'm happy to take questions anytime in between here. So this is what we just kind of covered. I mean, the traditional VWAP, the beginning of the day, the anchor right here, I started that because that's where this move clearly began. And we don't know that, we don't know on that candle that that's where we set the anchor. We always set the anchor, 3 to 4 bars later. People will say, well, how helpful is that? Well, you tell me after it pulls back and touches that VWAP and then gets above this point, how useful was that? You don't have to know in real time what the low was or what the turn point was, or that it breaks it right here and then the sellers maintain control. So it basically tells us with 100% certainty who's in control. If prices are above a rising volume weighted average price, the buyers are in control from that anchor from the beginning of the day or from whatever, again, that 10:38 a.m. low. It doesn't mean that they're going to, stay in control, obviously. What if it's bumping up against the anchor from, 3 days ago where it got hit real hard? Those are things worth knowing. So it's always about multiple time frames. But for one day, when we're above it, the buyers are in control. As it starts to oscillate above and below and the stock has had a big run, that's when you want to look for your fade and say, maybe this one's, maybe it's declining now. I would even put an anchor right off the top of this and see if that starts to, show resistance to kind of give us a stop level. It's just, again, there are levels of interest. But clearly, sellers maintain control here, lower highs and lower lows. Some people like to trade for these little bounces. Personally, I think it's a waste of time, but that's, I'm not here to tell anyone what to do. The anchoring bias is, what it's all about basically, is what, people say the most important price of the day is the closing price. Well, tell me how I trade with that. It's the most useless price because the market's closed, I'm stuck in a position, now what? The most important price is the price that we're involved and where we are in relation to that. And that's what the anchoring bias is all about. And basically the VWAP is, as you know, most likely, dollar cost average. This is maybe the most important slide on here. And this was, it looks boring. Ken Griffin, everyone knows who he is. Last year he made $4.1 billion, more than any fund manager ever. In 2021, when they were testifying about GameStop and that, he told Congress, virtually all trades today by institutional investors are in the form of program trades, such as VWAP and other algorithms. He knows this because Citadel does approximately 35% of all U.S. volume, making it the top wholesaler. So they're doing 35% of the volume, and they're saying most of it is done with VWAP orders. And he goes on to say it's not like they're large trades, as we know. They're that's not how the market works anymore. They're sliced into small shares, small pockets rather. So do you guys know the parent order, child order, and the way that works with an institution? Okay, so the way if Ken Griffin gets an order, it might be, listen, buy 500,000 shares of Intel today at VWAP or better. So they'll go to their program will tell them, okay, well, in the first 5 minutes of the day, approximately 4% of the volume is typically done. So we're going to do 4% of the volume in that 5-minute increment. So the parent order is 500,000 shares. The child order is, how do we spread this order throughout the day so we're not detected by people looking at their level 2s and saying, hey, there's someone, it keeps refreshing. Instead, they're going to say, we want to buy 20,000 shares. That's 4% of that first 5-minute increment, and they're going to spread that throughout the day. Now, that's how they'll do a lot of their orders. Sometimes they'll say, well, listen, we'll do a guaranteed VWAP order for you. So whatever the VWAP is at the end of the day, we're going to guarantee we'll do your 500,000 shares. So now the brokerage firm is acting as principal. They're taking the risk. They're not just working as an agent. They're saying, we're taking the risk on this order. So what are they going to do? They're going to maybe try to offer 100,000 shares pre-market to drive it down 2 points. or down $1.50 or scare people. There's some good downward momentum in Intel right now, so maybe they're going to try to scare it down. If they can sacrifice 50, 100,000 shares in the pre-market and get this thing down $1, and then they can go in there and scoop up 200,000 shares in the pre-market. Well, now they're long 100,000. They've covered their short, getting it down there. They've covered that. Maybe they've made a little bit of extra money, but now they've got 100,000 shares, and they only have 400,000 to do the rest of the day. So now they can set that VWAP order to just kind of go throughout the day. Now they're not taking as much risk because they've got that first 100,000 shares at that real low price. So it's all about how they do this. And the important thing is they slice it into these small child orders, and then they'll execute them. And this is what I think is really most important on here, and that's why I italicize it, is that these orders take place over the course of a day, a week, or a month. It's not like it's just 500,000 shares to buy. This is Fidelity saying, hey, we want to buy 20 million shares over the next, from now, between now and the next earnings report 3 months from now. So they'll say, okay, well, the typical Monday volume is this, the typical Tuesday volume, and we're going to slice that out into these pieces. So that's why you see a week to date, a month to date, quarter to date, since the last earnings report, that those become the basis of support and resistance. So obviously, you guys know this. If we're above a rising VWAP, it's bullish for that time frame. Below it, it's declining, it's bearish for that time frame. So you want to be aware of the direction of it as well. A rising VWAP obviously is positive, but it doesn't mean it's going to keep going higher. Some people like to use standard deviation bands and say, hey, it's 2 standard deviations above the daily VWAP. I'm going to fade some of this down. And then, and the same thing, a sophisticated hedge fund might say, we're a buyer for the day, but it's ahead of itself. So let's sell some, let's drive it down to VWAP, cover this short, and fill the rest of our position. So it can get as super complicated as you want it. I think it's best, though, like any analysis, is to make it as simple as possible. People argue, is it a moving average? Well, it's an average. It's a cumulative moving average. It's not a time-based where 10 days ago data drops off and the new day is replaced each day for a 10-day moving average. But it's a cumulative average that moves, right? As it gets new data, it moves. So in essence, it's a moving average. Simple, exponential, time-weighted. Time-weighted is a dollar cost average. I still use simple moving averages because most people still have them on their chart. If I go to like a Traders for a Cause, or if I go to a money show or something like that, and I've got 100 people in front of me, this is something I've done for years. I'll say, how many people here look at charts? And everyone raises their hand because they know they're in a technical analysis talk. And then I'll say, well, how many of you have price? Everyone raises their hand. Then I'll say something goofy like, Adam's pitchfork. And maybe 1 or 2 hands go up. And then I'll say, how about a 50-day moving average? And like 89% of the people will raise their hand. And I'll say, okay, well, let's think about this. Why do we use a 50-day moving average? Does anyone know why we use a 50-day moving average? The real reason?
Everyone uses a 50-day moving average?
Yeah, exactly. I mean, it is. That's exactly it. There's no real reason. If we're going to use we should use a 63-day moving average because there's 63 trading days in a quarter, right? And that's just, that's based on something. It's just not made up. 10 weeks, who cares? It's interesting that I kind of view a 50-day moving average almost identical to a PE ratio or a dividend or an earnings report. In other words, all technical analysis and fundamental analysis, in my mind, tells me the same thing. It tells me I want to be interested because other people are interested. Other people are interested in the pullback to the 50-day moving average. They've been trained, hey, it's 2 standard deviations above 50-day moving average, let's short it. So they add supply. It's and an institution might say, hey, it's 2 standard deviations above. Let's lighten our position a little bit. And as it gets down to the 50-day, if we sell 300,000 shares, we'll stick in a bid for 100,000 shares because we don't want it to fail at the 50-day, because then all these idiots will get confused and they'll short it and it's going to mess up our beautiful trend. So they'll stick in 100,000 share bid. So there's less supply because they were selling it down to the 50, and then there's more demand. So the shorts are going to say, hey, we're selling it down to the 50-day moving average, and we're going to add demand at that 50-day moving average as we cover. And then, there'll be sidelines people who say, hey, it's at the 50-day moving average, we have to buy. And what happens? It's a self-reinforcing, right? It's not self-fulfilling necessarily, but self-reinforcing. It says we're all interested in this stock at this time for this reason. But if two people are looking at Adam's pitchfork, how useful is that, right? So we want to know what are other people looking at. So, when it comes to fundamentals, we want to know when the earnings reports are. We want to know what Microsoft did and what they're doing and how it's trading off the VWAP. And not that we care how many laptops or phones they sold, but how is the market interpreting that data? We know that there is a fundamental catalyst today, and we have to be aware of that, because if we're just going to hold a position blindly into it, we could, our position could implode. But if we want to trade around it, it's not like you're going to start trading the stock on a 1-minute chart or tick chart in the after hours with it. You need some kind of you need some kind of structure, and the anchored VWAP will give you that in the after hours for that. And you'll look at it and go, wow, they sold a shit ton of these. I like the stock. But and we all did this before we actually became traders. Like, oh wow, I remember when 35 years ago, I remember I had an interest in the market, and I heard that something like, might have been Hewlett Packard or someone was laying off people. I was like, oh wow, that stock's going to get crushed, and I thought I was so smart. I was like, oh, that's probably a good short. And then I looked at it the next day, it's up. I was like, what's wrong with the market? Well, it's obvious. The company's being proactive. It's about the future expectations about where the company is going to be. So I didn't mean to go on too much of a tangent there, but that's basically why any of this works, in my opinion, is that there's other people. We're playing a game against everyone in the world who is also trading, and we want to get into their head. Where are they buying? Why are they buying? Where are they selling, and why are they selling? We don't have to know because we think that their cash flow spreadsheet says that Microsoft is going to sell this many subscriptions or whatever. We need to know how is that opinion, or how are those opinions being valued in the market. So, and you guys, I'm sure you've probably seen this. I've been floating this thing around for 15 years now. This is just, knowing market structure. Obviously, you don't want to buy stocks in stage 2 downtrends, declines. I think a lot of people learned that in 2022, or they're still stubborn, waiting for the long-term accumulation and markup. But it all begins with that and keeping your emotions out of it. And we've all seen this emotional chart for the longs. I put in my first book for shorts as well, because every single time you trade, not every single time, but a lot of times when you go long, someone's selling short. It's not just natural sellers. There's shorts in the market all the time. Most people don't realize how entrenched they are in the market. I think this room does, but those other opinions are on the other side of the market. Just when it feels like hope is coming, well, that's the denial stage for the bears. They're looking at going, no, this is a bullshit rally. The Fed's still going to do this. The unemployment is that, and all the things that they tell themselves, rather than just looking objectively at the market. So the most important ways to use the anchored VWAP is clearly just support and resistance levels. I've got a couple strategies in here, in this book that go on, but it's all based around support and resistance. I mean, when you talk about the IPO, well, it's because of support and resistance. If you look at, and where to anchor from earnings reports and that. Why? Because it becomes support and resistance often. It's a level of interest that often becomes support and resistance. So a lot of times when we see a significant level, from a key event, it will pull back and find buyers at that anchored VWAP. And same as same on the short side. But here you can see, again, this is why I don't like to short the touch of the VWAP. I should have had an example over here where it came strong down through there, but then recovered. But I mean, when you're short here and then it goes, it's hard to see, but that's $1.50 or so. That's a big move. And when you're just putting on a day trade, you feel like an idiot because you see your profit, deteriorating, and that you worked so hard for during the day, and now you're upside down in this stock, and it's going to influence your decisions. But this is what the VWAP does: is it adds structure to whatever time frame it is, just like simple moving averages. But instead of being based on random times that people came up with, 50 days, 200 days, 21 EMA, 20 simple, 8, 13, whatever, this is based on the truth of supply and demand. From the beginning of the day, do I really care how it responds to a 200-minute moving average? Maybe. I don't know. But I know that I find a lot more value in this. This was so this 1 minute chart, this is a strategy I wrote about in 2008. I wrote for trading markets. This is when I first really got real active with VWAP. I found it in 2003. I didn't invent it, by the way, just to be clear about that. Some people say I invented it, then other people are like, he didn't invent it, he's trying to steal that. So I'm not trying to steal anything. I resurrected it, basically, because it didn't, no one was talking about it, and it wasn't until 2015 that the anchoring capability was on any software when I had TC2000 do it. Anyway, so chase the gap or wait for VWAP, right? We all look at gaps and say, hey, I want to fade the gap, so if it's below the daily VWAP, maybe you're going to short it, but if it gets back above there. So this is an example from my book where all these little numbers are clearly laid out and that sort of thing. But chase the gap or wait for VWAP. If you buy the gap and then all of a sudden, it opens at 26, it was 23 yesterday, opens at 26, pulls back down to 24.25. If you bought at 26, you're down $1.75. You're feeling pretty stupid. You're probably going to puke the position and go cry to your mom. But why it just doesn't make sense. Rather than wait for things to settle out. Let it settle down. And in that first 20, 30 minutes, it settles down. And then it gets back above the daily VWAP. What does it tell us? It says, from that gap up, we had some initial profit taking, maybe some short sellers in here, but now the buyers have gained control. This is a fact. It's not an opinion. It's absolute 100% truth. Price is truth. And when it's above the daily VWAP, the buyers have regained control. So simply, not always, but buying there, a lot of people buy red to green, green to red, or I'm sorry, buy red to green, or they'll buy when it goes positive on the day, or when it eclipses the morning high. So would you rather buy up here as it eclipses the morning high, or would you rather buy down in here where the buyers gain control and sell some to the people who are buying above there? Because how many times do we see these moves fail? So Mondelez, you look at this on a weekly chart, it's breaking out to all-time highs, daily time frame. So where do you want to buy this stock? Do you want to buy the breakout right here? So these are days right now. You're looking at the 15-minute time frame. This is a great example. This stock gapped up on this day right here, and it pulled back, and it held underneath that daily VWAP, and then, I'm not daily VWAP, but from that event, and I believe that was earnings. It held below that, and it just took some time for the stock to settle down. And then last Wednesday was that, it crossed back and forth above and below there. Well, what was happening? Well, we had a pattern of lower highs and lower lows on the shorter term time frame. Now we're going sideways. I got involved in the stock right here on this day at 70.68 or something like that. I sold my first third that day as it hit daily R2, and today I sold another third. It was my plan to do this as it broke out, because what do you see? You see people all the time saying, well, breakouts don't work anymore. Well, they're right, because you're reading a book about trading that was written 15, 20 years ago that said just buy stocks that hit new highs with no consideration of where have they come from. So the point is, we want to be here at the onset of momentum, because if we buy here, we know that our stop goes below that level. That's the most recent relevant higher low. That's where all my stops go. On a long, for whatever time frame it is. If it's a 1 minute time frame with Mobileye, with 15-minute time frame here on Mondelez, if I buy here, I'm saying Now I believe that the trends are aligned from the daily time frame, which is in an uptrend, and on the shorter term time frame, it underwent its pullback, its accumulation, and this is the first higher high above that volume weighted average price and this rising 5-day moving average. So if I'm buying here, this is what I believe to be a new higher high and a new uptrend. So if it instead does this, where do I want to get out? I want to get out right here, maybe even earlier during the day. But that's my worst case for a swing trade. That's my worst case stop. As it rallies up on this day, what did I do? I immediately set my stop under there. That's the most recent relevant higher low. As it broke this high, my stop goes under here. That's the most recent relevant higher low. So I'm using the definition of trend because I'm a trend trader. Why would, if it breaks below that higher low and I'm still holding it, I'm not a trend trader. I'm an ego trader. I'm saying I'm right here, not the market. And as it runs from 70.60 to 71.80, I'm going to take $1.20 off because I know that the breakout crowd is looking at this thing and they're buying it. And I know that there's institutions that are saying, hey, let's sell some of those breakout dummies. And those breakout, and that's not my words. I'm just repeating them. So what I think is what often happens with a stock like this, it pulls back like this. I probably get stopped out, and it does this, and then in a few days, I'll set an anchor off this. This anchor will come down like this, and then I'm going to be looking to reload right here with my stop under there, and then maybe sell some there again, or whatever it is. But the point is that so stops for me. Whether it's a 1 minute time frame, again on Mobileye, what are the higher lows? You can look and say, hey, if you buy right here, you keep raising it underneath these successive higher lows, and then boom, where do you get stopped out on this one? Right here. I mean, that's what more can you ask from this stock, right? If you're just day trading it. So the entry, I think, is most important because you get involved at the onset of the trade. And oftentimes those buys in Mobileye, those buys in Mondelez, they're lonely, because people are always looking, people are always saying, hey, look, it's breaking out. Here comes the volume. Well, guess what? The volume comes after the move, as it's peaking. The volume comes as people get excited, as people on CNBC are talking about it, and people are talking about this thing. The lonely entry right here, it's like, how come nobody else sees this, man? It's time. It's just, what is wrong with people? And then, look at where does, even here, I didn't even realize this, but where did the biggest volume come in? Right at the high. I mean, right at the turning point. So volume tends to expand in the direction of trend, peak at the top, and then if it's a good trend, well, it diminishes on the declines like it did in here on this daily chart. It was up on big volume, pulling back on lighter volume, reloading for a break higher in Mobileye. So how important is market? Yeah, so early in my career, I always used to miss tons of good trades because I was waiting for the market. Or the market's lower, but this stock's ripping. I can't get involved in that. It's gonna crash. My thought is always each trade based on its own merits. If the market's crashing, I mean really bad, and there's some stock bucking the trend, maybe I'll buy it. But if I do, it's just going to be it's a position size question. I'll go a third of my normal risk, maybe half, a third. So it's more about conviction level. If I've got a market, that's supporting my stock, then I want to get involved and really lean into it. Most of my trades, this year, in fact, have been pretty small sized. It's infuriating as hell. Since the beginning of the year, my thesis for this year is, and I'm willing to change if the market tells me otherwise, is that if they didn't scare you out in 2022, they're going to wear you out in 2023. I think everyone's set up that this market is breaking out, it's going higher, we're in a new bull market, and I think a lot of people are I'm not here to predict the market. That's not what I do. I can't get paid by predicting. I'm going to trade what I see, but I think that we're going to get some complacency, or we're getting to that complacent level, and they're going to pull the rug on this market, and things like ARK are going to go revisit their lows. And if that happens, then the rest of the market's in big trouble as well.
Is that because of the way you've seen them respond to some of the VWAPs that you look at, or is that just sort of a feel thing?
A little both, yeah, a little both. I mean, so, the thing is too, for a real bottom to be made, I think you need a flat to advancing 200-day moving average, and it's still declining. There's, in those. And I think, you want all the moving averages stacked. So on a weekly, I look at the 10, 20, 30, 40. And then early on, it'll ride, the 10 will be above the 20, above the 30 and the 40. Early on in the trend, it'll, ride that 50-day moving average. Then it'll fall down a level to the 20-week and the 30-week and the 40-week. Then they start to crisscross. That's distribution. And the same thing can, that's on a weekly chart, right? Which doesn't really help for trading. But so far, that's what's happening with stocks. So when a stock like, why do I keep forgetting the name of it? Mondelez breaks out, I want to sell some. I don't want to get excited. Other people are getting excited going, hey, it's breaking out, new highs, here we go. Me, it's okay, reduce risk. So this year, so far for me, has been frustrating, and I'm okay being frustrated because I know that's what I kind of feel like I, went into this year thinking. So it's frustrating that I haven't been able to lean into anything really good. And I've tried some of these little crazy plays, and they just don't stick, like these little AIs. I thought I had a good one. You know the one I'm thinking of, the one that just croaked the other day.
You manage your risk in that, because that was something that moved up really quickly and then came off.
Which one, Bullfrog? AI. I was in AI when that happened. And the funny thing is, this was really stupid of me. I'm in this email group with some people who have good connections or whatever. That story was out 4 days, for 4 days. And some person brought it up in that chat group. I was like, yeah, market doesn't seem to care. I don't care. I'm long. That guy's gonna, cover for me higher. And, it went like, 50% in like 6-7 days. And then, it just started declining. I was like, I don't know what's going on. And then somebody said, oh, there's a negative report on it. I'm like, that's not news. That's not even news. So I tried to buy the dip. So I broke all my rules, which 31 years later, I still do. But I got exactly what I deserved as well, right? We get what we deserve. Fortunately, I didn't hold it very long. I was like, man, this is just stupid. What am I doing? You can't, just because you made so much money on it, recently, the last couple of days. But I thought you were thinking about the one, because I was in this one last week, Bullfrog. Yeah. And I was going to hold a big position, but I went skiing on Friday instead. So, which was a good thing. I think I saved a lot of money. Yeah, but the Bullfrog croaked, right? And did you guys trade those warrants? They had warrants. I didn't understand them because it said they were convertible at $7.80, or they're exercisable at $7.80, and the stock was like $8.40, and they were trading at $1 and just not moving. So I was loading up on them, going, "This is the deal of the century." What's? They've actually held a little bit better, fortunately, because I held some of those when I went skiing and didn't realize it. But
so the AI move wasn't. There wasn't anything in the VWAP that was suggesting this is like a really good, outside of the initial move, but like on that pull-in.
Oh yeah.
Curious about like the anchored VWAP from the breakout, or for like I was curious about another example.
Yeah. No, we can take a look at that. So yeah, right there. I mean, nailed it. That's the one you're talking about. That's that's that gap down. And I think I was looking at. I know what I was looking at. I tried to buy some in here that day at that invisible support. So again, this is why, I thought, well, it's deep enough. It's, the 5-day moving average is still rising. I'm going to break my rules this time. And, I got what I deserved. I can't complain about it. But yeah, so, from a perfect example, from key points. And this is, you know, the handoff from there, and then the handoff from here. This is the new momentum lower. So if you get a move up in the next day or so towards this level, you know, it's likely it's gonna shit the bed off of that level. You know, and the bullfrog, what happened to that thing? Is it still going down? Yeah. Anyways, that was just a mess. But I bought it right over in here as it broke this level, because it broke that resistance. That was last week's weekly VWAP. It ran up. I sold some. I added into it here. Then I sold some into this, added into here, sold some because it was the end of the day. Next day, yeah, I held warrants. BFRGW. So you can see they don't even trade.
Will something like breaking out respect the VWAP on the way up the way AI respected it on the way down?
Yeah, so exactly, right. So here we go. So very similar to what I showed on Mondelez, you know, this was a key level right here. It didn't really respect it there though. Maybe it did from this low. Then you can start playing all these games. Well, maybe I should anchor it here. Maybe, you know, and then you're just then you're just trying to see what you want to see. And that's, you know, the danger of these. But what I'll also look at is I like to look at them, you know, from this peak, for instance. So after it has a big intraday move and then it runs up, it consolidates in there, then maybe buy some in this area, you know, sell some on the breakout, because, you know, again, that's 30 cents or so. That's worth taking a few thousand shares and then holding, you know, for whatever, and then it breaks right here the next morning and then it's lights out. So anyways, let's go back to what we were doing. Actually, do you have any more questions about that?
No, I was just curious because those are examples of like quick hard reversals that, you know, basically would change the dynamic of the trade. Have you used average VWAP on Bitcoin at all?
Yeah, we can look at that. So here's Bitcoin, and you know, I'm looking for the potential of support right in here. Basically, this is the VWAP off of the VWAP from the low. So this is Trading View. This is the low here, and so it came down. If that's on the right spot.
Which anchored VWAP do you use in Trading View? Like 20 of them.
Yeah, the one that they built. Okay. So right up here,
yeah,
it's in here.
Okay.
That's the one I trust. I'm not going to trust some random guy who's just creating stuff. Who, you know, a lot of those guys, and there's some even great trade, but you just don't know who's creating them, right? They could just be data guys who just do stuff. But the anchored VWAP off the peak, you know, it wasn't perfect, but I mean, it was definitely a level of interest after this big rally to tell you, at least, you know, tighten stops in this area, right? It's not meant to be, or I think people expect it to be perfect. Like, hey, it's touching the VWAP from the all-time high, I'm gonna sell short. Well, calm down, just wait. Why don't you wait and see what happens in there? Switch to a 30-minute time frame, and this is what I don't like about their charts. So here we can look at it and say, you know, from this move, maybe you look at it and say, well, that was clearly an important move. And yeah, so if you shorted here, you know, if your stop was up there, I can't take those. Actually, I don't even trade it short. I don't have a brokerage that does that, which is fine because I probably would have lost a lot of money shorting Bitcoin over the years. So I don't look for one that allows me to short. Know your weaknesses, right? So anyway, support and resistance, we've spoken about it enough. And the rate, you know, even later on, it might seem like, you know, this is a great thing too. This is, you know, 4 or 5 days later. Right? So this is this is several weeks, it looks like, on the 65-minute chart. But there was a big move that developed here. It gapped up to it perfect that day, and then just the next move lower began. And you see this kind of stuff happen all the time.
Can you go back to the last chart, please?
This one?
So
Yeah.
something like this, where you have that gap up and you
Yeah.
go right into that VWAP or that resistance zone to you, is that something where you would probably put on maybe more risk?
On something like
Number 9?
Yeah, number 9. Yeah.
Just because of the magnitude of how much energy? Yeah, I would. And I wouldn't time it off of this chart. This is a 65-minute chart. I would be looking at my 1-minute chart. But I've identified the key level off my 65-minute chart. So yeah, definitely. If it does something like that, especially when you back it up to the daily time frame and you see that this is, a Peloton or some shitty little stock like that. So that it's always, there's always the little pieces. It's the personality of the company. Is it, just one of these garbage stocks, which I guess all AI stocks are apparently. As much as we wanted them to just be the next little thing we could just trade every day to the moon, but leave that for the Reddit crowd to rescue them. So anyways, just like any level of support or resistance, the more times it's tested, the more likely it is to fail. Resistance, here you can see from a key high several years ago, and we're seeing this in the market right now, that there's a lot of stocks hitting, the NASDAQ is right at its all-time high anchored VWAP right now, and it's getting squirrely in there. Is it gonna hold, or is it gonna pull back to this year's VWAP, which is still, 5-7% lower? I think we already spoke about the simple and exponential moving average. Entry techniques, again, not all touches are going to result in a bounce. This is a presentation that I do kind of to introduce people, and I know you guys are a little bit more experienced, so that's why I spent more time on the real charts, and if it seems like I'm blowing off this PowerPoint, I kind of am. But these are examples that are in a book that I wrote, and I captured these charts a year ago, and that's why the names aren't on them.
I mentioned something about in one of the, I think it was one of the two stocks that you were talking about, maybe Mobileye. If it comes in and it goes below day 1 VWAP, but then touches day 2 VWAP, I'll buy it back above day 1 VWAP. Is that what you said?
Yeah, so it's
Is that like a strategy?
it's a strategy that I wrote about in the book.
Okay.
You didn't buy the book?
Not yet, sorry.
Yeah, so in particular, when you see a stock that had a good, maybe a
Maybe I
breakout.
should buy the book.
Uh,
Tell me about it.
I'll tell now you're going to feel guilty. You have to. It's a guilt purchase. No, but when you see a stock that's broken out, and the next day, and it's an obvious breakout, you missed it for whatever reason. The next day, oftentimes, what's going to happen is kind of what I was talking about earlier, is that someone's going to have a big buy order, but they don't want to show their hand to the market. So first thing in the morning, what are they going to do? They're going to try to sell the stock down so they can create the illusion that, hey, this thing's failing, and they're going to sell 50,000 shares to drop it down. But once it gets to the prior day's VWAP, they're like, no, we're not selling anymore here. We're going to stick some bids in, 100 shares at a time, refresh for 100,000 type thing. So the prior day's VWAP often acts as support in that on that fresh break. And just the same is true on the flip side. If a stock has a fresh breakdown, and then this has been a great short, by the way, which is DOCU. I actually covered it today because I'm not planning on really trading tomorrow. But this has been this one's set up perfect. Anyways, I think I half answered your question, or did I answer it? I'm sorry.
So like the trigger for the entry wouldn't be necessarily the touch of 2-day VWAP. It would be.
No, what you want to see is that there's still buyers at the prior day's VWAP, and then basically, this is, the stock broke out, and it did this. So this is the fresh breakout. So now this is maybe 6 months, but this is today. This is today's action, and it closes like this. Next, and today's VWAP looks like this. Let's say it closed up here. Next day, pre-market is trading here. It comes down, and then this is the 2-day. It's really 1 day plus an hour or 45 minutes. I just call this, the 2-day VWAP. So what you'll see is this is today's VWAP, right? So now we're looking at this and saying, I don't want to buy it while it's below today's VWAP. This often finds bids. So what I want to do is see this, and then as it gets back above the daily VWAP, that's my buy right there with my stop under here. Okay. So it's just the opposite on the downside, where it breaks and it closes near the low. This is the daily VWAP for that day. Next day it opens up, it rallies a little bit, maybe it rallies through that, right? And then it does this, it breaks below the 2-day VWAP and the daily VWAP, shorting here. Now we know that the sellers from yesterday, the buyers aren't taking back control. The sellers aren't taking back control. They defended it in there. That's actually, I actually debated whether I should even include that in the book because it's like my main thing.
Okay.
And it's in the book now, and here I am expanding further.
Yeah, but what are the other criteria? So would it be day one has to be above average R vol in the breakout, or do you care about the volume?
I don't really care about the volume. I mean, it's most likely going to if it was, if it was a significant, 2 to 5% move. It's highly unlikely it came without volume. I don't care about the volume. I care about the volume weighted average price. How does the average participant feel since that event? That's the important. It's not the number of shares or the RVOL, although it's highly likely that it is higher relative volume. So to me, it's just, I don't even really look at the volume when I'm trading it. It's where are we in relation to the event and the psychology and how people are positioned from that event. Are they defending it or are they moving away from it? So DOCU is a great one because I haven't had really good shorts recently. But again, here's another one. If they didn't scare you out on this move, they're wearing you out. And I was looking at it going, this stock still looks like a piece of garbage. So I looked at, one, we have a decline. So I was looking at it over in here, and I actually put it on Twitter right in this area saying, keep an eye on this one. It had that big gap up, and Carlton, I didn't short it, so that would have been right here, right? And that was, but it touched perfect at the year-to-date anchored VWAP, right? And then it wasn't until a couple days later that it really officially failed. I think I got short, I really don't remember, but I think it was on this day when it broke below that VWAP right there. And these arrows are where my stops have been lowered. And for my subscribers to Alpha Trends, I suggested that they lower it on the final third to just above this little low. I covered it today because I'm not going to be trading tomorrow. But that's been a good little one. But again, it's the definition of trend. So my stop goes just above the most recent relevant lower high on the short side.
And then when you're setting your stop placement, what time frame are you using for stop placement?
That's most likely like a 2-minute chart, maybe a 5-minute chart, because I want to really hone in on it. That's what I excel at, is that on my charts, if I what I'll look at, and it's more than this on my computer, but for every stock that I look at, I've got a minimum of these, time frames that I'm aware of every single stock that I can go through quickly. So I'm aware of the bigger picture, and I just keep dialing it in. Then the question is, well, how close is too close, right? And you've got to be careful not to just make your decisions based on that shorter term time frame, but realize that they exist in relation to the bigger time frame as well. Don't just get caught up in that, shortest time frame possible. So where to set the anchor? Like it says here, high volume events, measurable events. I don't even know what I meant there. I'm sure it says. So high volume events, big volume breakouts, big volume breakdowns. Oftentimes, the big ones like this, and you can tell right here. Anyone know what happened to this stock at number 3 and 4? Make an educated guess. Earnings, yeah. I mean, they're 3 months apart, clearly, right? So a lot of times they happen to be 3 months apart because that's earnings reports, and that's when people revalue their holdings and perceptions change. So we want to anchor to those key high volume events from gaps, from the year to date, Federal Reserve announcements right at 2:15 as soon as they announce. Look at how this stock that day, it pulled back deep. I remember I bought this one above here and my stop was under that level. Then it started going back and forth. So Just the same as, there's the markup, there's that distribution that's going on in there. The buyers aren't clearly in control here, but the sellers aren't clearly in control. So what does that tell us? It tells us there's indecision. And in indecision, we look at it and say, maybe we just leave this alone, or we say, wait a minute. If it's to break below support as well, if it's on these 2-minute candles, if it's going to break below that 280-240, and I can set my stop up here at 280-263, this might get the shit kicked out of it because it's a Federal Reserve announcement and things like this happen on a regular basis. So even several days later, this one, like 5 days later, that from the Federal Reserve will often, there'll still be buyers and sellers from earnings reports. From significant lows, they'll often act as support because there's a buyer that realizes, hey, we want to buy more of this stuff. What's the fair value? Well, that was the low. Let's buy, the average from that level, from significant highs, week to date, month to date. And again, so this is going back to where would I manage risk? And here was a stock that, this shaded area right here on these 65-minute candles is this area right here on 1 minute. So same story, chase the gap or wait for it to break above the VWAP right here, and then the stop goes below the low of the day. You know that you're with the buyers. It's broken, this downtrend on the higher time frame. It's above a rising 5-day moving average. It's made a higher high on the 5-day moving average. So buying in there and then holding as long as it tells you to. It's anyone do price targets in here? I mean, idea of where a stock. I'm sorry. So I could have worded that better. I'm not a fan of price targets. I think you have to have a risk reward, right? You have to say it looks like it has the potential to go to this point, but people, look at price targets. Like if you say, hey, I think that on Twitter, hey, the stock's 40, I think it go to 45, then it'll go to 43.50 and it'll turn back down, and someone will say, hey, Brian, you still think it's going to 45? I'm like, what are you talking about, man? It clearly told you, I even tweeted, it broke down, it broke the pattern of higher lows. It's more important to just listen to the message of the stock is my point. We want to have a theoretical risk reward. Otherwise, what are we doing this for, right? We feel like we have an edge, we have our plan, and we know where we're going to get out. So, buying breakouts, this is, so here, this is, again, where do you buy the stock that's in a trend? Do you buy the pullback, right? This is what people will tell you you're supposed to do. Or do you buy, my preference is buy strength after the dip. So as it gets back above, as we know, the buyers have regained control. If you're buying in here, there's too much uncertainty. It's going down. The buyers are back in control. Now this happens to be, it looks like a weekly chart. This could be a 1-minute chart. It doesn't matter. That's the beauty of technical analysis and VWAP. But to buy as the buyers regain control, and we know with 100% certainty that at this point right here, the average dumb person who bought high is now making money, so they're feeling good about it. The average short is losing money, so the buyers are in control. And that's what we want to look for, is buying that strength as it moves away. We don't want to buy the breakouts because look again, if you're buying in here, you're way ahead of these breakout people. And here's some breakouts that worked, and I would have sold a third and I would have looked at it the next day and it went higher and I wouldn't have cared because they don't always do that, especially this one. I might have even probably sold the whole thing if I was involved in this. Can anyone guess? This is through last March. This would be really difficult. I'll send you a copy of my book if you can guess what stock this is. There's no price on there. There's no nothing. It's tough.
AMC.
Nope.
Coin?
Nope.
Tesla.
Nope. It's a car company.
Rivian? CarMax? Lucid?
Nope. No free books. It's Ford. Or do you want to short the rip, right? That's what people say, short the rip. Oh, it's short the rips. I was like, that's the stupidest thing ever. You don't want to short when the stock's going up. We're not, I don't know how big some of you guys are trading, but you don't have to put 50,000 shares in and leg into it. you can crush it on the way down. Wait for, and you don't have to short the new low. People, I think uneducated money generally shorts the new low after it's had one of these declines. Doesn't mean it can't continue lower, but for me, it's always a place to lock a little bit in. Instead, we want to short when we know the sellers are back in control from the lowest point prior. So from the anchor from this point, I would have sold short in here and I would have been out right there. But I also would have sold short here with a stop above there, and I probably wouldn't have wrote it. I probably would have been out on this big up day, most likely, just based on the intraday action, because that's a big candle. But we want to short when the sellers are back in control. And when you keep these VWAPs on there, sometimes like when people say, well, how many VWAPs should I keep on there? Well, your chart's going to get really cluttered quickly. But if they're still relevant, or when you're looking at the stock the night before, just go back and put one at the prior lows, put one at the prior highs, and see, is there any price memory in here? And we're not trying to necessarily curve fit our trade, but just to get an idea, is there anything in here that just gives me a little bit of extra confidence that maybe from that low back there, there's still, that was resistance before. So maybe, if this stock starts going higher, I would think it's going to kind of like stair step higher. It's going to run into this VWAP, pull back, find buyers at that red one, bounce up through, run to the green, the purple, pull back to the green. And, that's how stocks kind of trade. So we want to sell short weakness after the rally. We don't want to short the rally. And we don't want to short the breakdown, because the breakdown comes here, the breakdown comes here. And, that's kind of the same entry, but still a little bit of a head start is what we're looking for. So this kind of looks like a mess, but it shows, do you buy or do you short these rallies? It's kind of foolish, because where's your stop go? How many days do you give it? Or do you want to short these dotted lines, these breakdowns, the labeled C? Or do you want to short at B when the sellers regain control, and then set your stop above the most recent relevant lower high, which would be over here, etc. Although, when I look at this, these are daily candles. I wouldn't set my stop. Let's say I entered on this one. I wouldn't set my stop up here. I'd use a shorter term time frame. I'd likely use a 10-minute chart and set my stop above the 2:35 high from the day before, 2:35 p.m. that is. So there's two things we got to be good at. Is one, getting all this stuff and looking at it objectively in real time, especially if you're a shorter term trader, and then trading it, because I still look at things sometimes and I'm like, man, I called that perfectly. Where was I? It's crazy to sit there and or sometimes I'll set an alert on a stock. I'll look at it and go, it doesn't look like that's really happening. And then I look at it 30 minutes later and the stock moved $2. Like, what was wrong with me? I mean, it happens to all of us, right? So being a good analyst is important, but obviously the skill that you want to develop, be better at, if you're going to be better at one of them, is to be a trader. So, it's just a quick, easy way to say who's in control from any point on the chart, and keep us on the right side. Use it from breakdowns, breakouts, highs, lows, Federal Reserve, FDA. I didn't do it in here, but mirroring it with short interest to see where the shorts are. You can read about that in the book. IPOs, earnings, year-to-date, gaps, all of that. So that's the book. It's on Amazon. It's on Google, Apple.
Do you want to learn more actionable trading strategies like the one you just learned from Brian Shannon? Then watch the video also with Brian on VWAP appearing on your screen right now.